Hi, Andrew Bell here with you from a very unusually cold Gold Coast. We're stuck with that same Arctic vortex that the rest of Australia did, or certainly the east coast of Australia. But the days are crystal clear, blue skies, just a little on the chilly side. As I mentioned at the beginning of the year, each fortnightly report of mine during the course of this year will cover an aspect from our annual property report, which I delivered in January. It's continually updated. Today I've worked through all of the 5 fundamentals that drive the national market. I've worked my way through supply and demand and other contributing factors that have influenced the national market from that perspective. We will process a little closer into the Queensland market and then move particularly into the Gold Coast market over the next couple of months. However, today I thought I would just give a couple of quick updates. First, let's have a look at the 5 fundamentals that drive the real estate national market. The latest report on the economy is that it is proving to be more resilient than was forecast, particularly off the back of the strength of New South Wales and Victorian economies. Fundamentally, it's not that the economy is actually growing more rapidly, but rather that we are managing the slow growth environment without the stresses that had been anticipated. Good news. Interest rates are now tipped to stay at their current levels for a longer period than thought, and there is even a prospect for a further drop in interest rates, depending on what actually happens as a result of China's slowdown and of course any knock-on effects that may happen from the European scene, particularly as a result of Greece. But they're most likely to stay at their current levels, certainly throughout the next 12 months. Unemployment is still floating around that 6% bracket and hasn't yet moved to 6.5 that has been forecast. Perhaps even on that front, unemployment won't be as bad as some had forecast. In fact, the share of population currently working is 61%, which has held steady at that level since 2013, despite ever-increasing percentage of baby boomers exiting the workforce, which means that we've got the capacity for this population growth. On population growth, it's slowed, although we're still at very high levels. It's particularly evident in the mining states and the territories. However, we did still add about 330,000 people to our population during the calendar year 2014. In the final quarter of 2014, there were 64,000 people added to our population base, and that was the slowest quarterly increase since June 2006. The annual rate of national increase, being births over deaths, is at its lowest level since December 2006, while overseas migration is at its lowest levels since June 2011. It's interesting to note that most of the population growth has occurred in New South Wales, Victoria, Queensland and Western Australia, and that those 4 states account for 93.5% of population growth in the last year. The latest research from CoreLogic shows that capital city dwelling values rose 9.8% over the financial year to the 30th of June, with Sydney being the best performing city in the 3 months to the 30th of June, with a 3.1% increase, which is well ahead of other capitals such as Melbourne at 1.9%, Adelaide at 1.8% and Brisbane at 1.4%. Now, the last 2 areas of note for this particular report. Firstly, I was interested to see a report out recently about 7 reasons not to be too dismal or too pessimistic, even though consumer confidence has certainly been falling in recent weeks. I'm not surprised with all the dramas around Greece and of course the big drop in China's stock market. But the 7 reasons to be more optimistic was: 1, interest payments on a $350,000 mortgage are now $730 a month, lower than they were just 4 years ago. Now, if you take a $700,000 mortgage, you're $1,460 a month better off. So servicing a loan at present is the lowest or the most affordable it's been ever. This has then freed up, the second point, freed up money for people to get out and spend, whether it's on a holiday or simply just going out and doing whatever recreational enjoyment you have. So we've got more money to enjoy ourselves. The third is we're experiencing a rise in wealth levels off higher real estate prices and increased savings. It's a good thing. Fourth, household savings are relatively high at 8.3%, putting many Australians in much stronger positions financially. Fifth, the Australian dollar, whilst affecting our holidays overseas, is actually a big boost to our manufacturing, our tourism, education, farming, mining, and all of that will feed through into a stronger economy. Good news again. 6, export volumes are continuing to rise, in fact strongly, up 8.1% on the year to date. Now that's reflected in the current account deficit, which as a share of GDP is around its lowest in 30 years. Another good thing. And 7, we've been able to manage the massive impacts of the rapid decline in our mining without a blowout in inflation or a blowout in our trade deficit. In fact, there have been no massive rises in unemployment, and interest rates have been maintained at great levels, and we've avoided a recession. All really positive things. Now, I know a lot of people won't see all of that as being particularly positive, but from my perspective, I like to see the glass half full rather than focusing on the half empty. Now, my final thing for this report is I'd really encourage all Gold Coasters to get behind the city's push to have the $600 million extension of the light rail to the heavy rail completed before 2018 Commonwealth Games. This means, due to timeframes for construction and so on, that a decision has to be made in the next couple of weeks. If you'd like to sign the online petition, it only takes a couple of minutes of your time, and your weight, adding to the pressure we're trying to apply to the state government, would be very much appreciated. It's a vital infrastructure for the Gold Coast. Over 6 million people have used the light rail since its construction already, and it'll help build our city significantly. We're already seeing the great success feeding through to strengthening real estate prices and beyond. We'd really appreciate your support. So if you get a moment, you'll see the click on facility on screen. Well, that's it for this week. Look forward to being with you again in a fortnight's time. All the best till then.